Listen to me. If you are sitting there at 60, 65, or 70, and you are trying to stay on top of your financial life, you have probably heard of a service called Borrowell. You know it's a free app that lets you check your credit score, and you are smart to be looking at it. But I know what is happening in your head. You are looking at that number on Borrowell, and then you log into your bank account, or you check another service, and you see a completely different number. And suddenly, that fear creeps in. You start panicking, thinking, which one is real? Is someone stealing my identity? Am I losing control of my hard-earned retirement security? Let's clear up the confusion right now so you can stop worrying. The core question you are asking is simple: what credit bureau does Borrowell actually use? The answer is Equifax. Specifically, Borrowell partners with Equifax Canada to pull your credit report and your credit score, updating it for you every single week. It is a legitimate, safe, soft inquiry, which means checking it will never, ever hurt your score. But here is the real problem, and this is what trips up almost every single person heading into retirement. You check Borrowell and see your Equifax score. Then you check a service like Credit Karma, or you look at your statement from a bank like RBC or Scotiabank, and your score is 30, 40, or even 50 points different. You think to yourself, someone has messed up my files. I need you to understand how the system works so you can breathe a sigh of relief. In Canada, you do not have just one credit score. You have two primary credit bureaus keeping tabs on you, Equifax and TransUnion. They are two entirely separate companies, like Coke and Pepsi. They do not share information with each other. Borrowell only looks at Equifax. If you check an app that looks at TransUnion, you are looking at a completely different financial report card. Why does this happen? Because major institutions choose who they report to. One of your credit cards might report your flawless, on-time monthly payments to both Equifax and TransUnion. But another lender, maybe a local credit union or a specific department store card you've had for 20 years, might only report to TransUnion. If Equifax doesn't know about that good behavior, or if they haven't updated a balance yet, the numbers will not match. And it gets even deeper. Even within Equifax itself, there isn't just one score. Borrowell shows you what is called the Equifax Risk Score 2.0. It is a highly respected model that a lot of lenders use. But if you walk into a bank to get a mortgage or a car loan, that lender might pull a FICO score or a completely different industry-specific version of Equifax's data. So when you see different numbers, I want you to stop stressing. It is not an error. It is not a sign of fraud. It is just the reality of a system that uses different math formulas and different data streams. Now, why does this matter so much to you right now, at this stage of your life? There is a massive misconception out there that once you retire, your credit score doesn't matter anymore. People tell themselves, I'm done buying houses, I'm done financing cars, I'm living on my pension and my savings, so who cares? That is a dangerous mistake. Your credit score is your financial reputation, and it follows you for life. Even if you aren't planning to take out a massive new loan, an excellent credit score protects you in ways you might not realize. If you decide to downsize and rent an apartment or move into a retirement community, guess what they are going to check? Your credit report. If you want to switch insurance companies to get a better rate on your home or automobile coverage, many provinces allow insurance companies to look at your credit history to determine your premiums. A poor score could mean you pay hundreds of dollars more every year for the exact same insurance coverage. That is money being drained right out of your retirement nest egg. Worse yet, retirement is exactly when you become a prime target for financial fraudsters and identity thieves. They want your clean, established credit history. If someone opens an unauthorized account in your name and you aren't looking, they can ruin your financial standing before you even know what hit you. So here is your actionable takeaway. This is what you need to do to protect your peace of mind and your wallet. First, use Borrowell for what it is good for, tracking your Equifax data. Log in regularly, look at the accounts listed, and make sure every single line belongs to you. If you see a credit card or a loan you never opened, that is your red flag to act immediately. Second, because Borrowell only shows you Equifax, you cannot stop there. You must also check your TransUnion report. You can do this for free through services like Credit Karma or by requesting your consumer disclosure directly from TransUnion. You need to see both sides of the coin to ensure no errors are hiding on the TransUnion side while you are only monitoring Equifax. Third, look at the trends, not just the exact 3-digit number. If your score fluctuates by a few points from week to week, let it go. That is normal credit utilization and timing differences. What you are looking for is consistency and health. You want to see a stable trend line, ideally keeping your score in the good to excellent range, which means keeping it above 750. To keep that score high without taking on unnecessary debt in retirement, remember the 2 golden rules that make up the vast majority of your score: pay every single bill on time, every single time, and keep your credit utilization low. Credit utilization means how much of your available credit limit you are actually using. If you have a credit card with a $10,000 limit, try never to let the balance exceed $3,000 at any point in the month, even if you pay it off in full when the statement arrives. You worked way too hard for way too many years to let confusion or negligence damage your financial security now. Borrowell is a fantastic, free tool to watch over your Equifax profile, but you are the master of your own retirement. Understand the system, look at both bureaus, protect your identity, and stand tall in your financial truth.